The world is a pretty shaky place right now, isn't it? Food and fuel prices are through the roof, and inflation is hitting record highs. In times like these, the big question is, how do you protect your hard-earned money from just disappearing today? We're talking about one of the oldest and most reliable protectors of wealth, gold. We'll dive into why it's a solid investment, how you can get started, and what you could potentially gain. So, why gold first off? Investing in gold isn't like buying a trendy gadget or speculating on a hot stock. Gold is the OG of value. It's the international standard that, deep down, all other currencies and assets are measured against. Think about it, governments can print more money, but they can't print more gold. As gold reserves on Earth shrink, its value naturally tends to rise. That's why serious investors don't just hold gold for a few years, they hold it for decades. It's a true store of value, with way less drama and volatility than stocks or currencies. For decades, gold has been one of the top 3 most liquid assets in the world, right up there with oil and the US dollar. It's a classic safe haven asset, perfect for protecting capital. Whether you have a little or a lot, one of its superpowers is preserving your purchasing power. When inflation goes up, interest rates usually follow, which can make riskier assets like stocks look less appealing. Why? Because safer options like bonds or bank deposits start offering better returns. During these times, smart investors often move their money from stocks into gold, which pushes its price even higher. Ready to invest? The modern financial world gives you plenty of options. If you're someone who likes to physically hold your investments, you can go the traditional route with gold bars, coins, or even high-quality jewelry. There's a certain peace of mind that comes with having your assets right in your hand. But if you prefer a more digital approach, there are lots of great alternatives. You can look into gold ETFs, which are funds that track the price of gold and trade like stocks. Then there are futures contracts and CFDs, which let you trade on gold's price movements without owning the physical metal. Futures have a set expiration date, while CFDs are a bit more flexible. And don't forget about gold stocks. You can invest in the shares of companies that mine or process gold. This is another popular way to get exposure to the industry without buying the metal itself. Alright, let us break down the 7 key reasons why gold has been a go-to investment for over a century. First, gold preserves wealth. Throughout history, it's been the ultimate symbol of prosperity. A company can go bankrupt and its stock can become worthless, but gold can't just disappear. It holds its value over the long haul. Second, it's your shield against a weakening dollar and other fiat currencies. The world's reliance on the US dollar is a big deal. Central banks can print it endlessly, which chips away at its purchasing power and affects every other currency. Gold, which can't be printed, is your best defense against that devaluation. Third, gold is a true safe haven. It's known for its stability. Even when the world feels like it's falling apart, gold prices tend to be much calmer than other assets. Its high liquidity and low volatility make it the perfect place to park your money while you wait for the storm to pass. Fourth, diversification. You've heard it before, don't put all your eggs in one basket. A smart portfolio has different types of assets that react differently to market changes. Gold is a star player here because it often moves in the opposite direction of stocks. When stocks fall, gold often rises. Fifth, high liquidity. This is huge. Liquidity means you can buy or sell an asset quickly without a big price drop. Gold is one of the most liquid assets on the planet. You can trade it in seconds on an exchange, which is a lot safer and faster than trying to sell, say, a piece of real estate. Sixth, it's a fantastic hedge against risk. Every investor's nightmare is a market crash or an economic crisis. Historically, gold prices have risen during major downturns, helping to balance out losses in other parts of your portfolio. And finally, reason number 7, global demand. Everyone wants gold. Governments are constantly adding it to their reserves because it's vital for economic stability. Plus, it's incredibly durable and doesn't corrode, which makes it essential for the jewelry industry. That demand isn't going anywhere, no matter what the price is. So, whether you're looking for stability, protection, or a way to grow your wealth, gold has proven its worth time and time again. Thanks so much for watching. If you found this helpful, be sure to hit that like button and subscribe for more content on how to navigate the world of investing. See you in the next one.